A very good evening to all our mentorship traders. We are end of yet another week of trade. Tonight we are on the 19th of March 2021. It's a Friday evening, 9 p.m. Indian Standard Time. As always, a mentorship invest meet wherein we'll talk about the index and few sectors and then talk about few investment opportunities from the medium to long term perspective. A warm welcome to all our mentorship traders once again, and let's talk about the Nifty. Quite a tough week, isn't it? It was. The market sold off for, I think, 5 consecutive sessions, breaking below this range, which was held by 14,500. We've got a small gap here. If you can see this, the 2 days between the 1st of Feb and the 2nd of Feb, we have a gap. And the index teased this gap, closed this gap, and bounced back with quite a sharp momentum in today's trade. The bigger picture is not that good because we have a clean channel breakdown. This rising red channel, of which the lower border seems to be quite promising because it connects the lows of October 20, then Jan 21, very close to Feb 21, and then recently March 21. Now it has broken down. So we moved into a short-term downtrend for sure. And today what we saw is nothing much than a bounce back. Taking a look at the 75-minute time frame charts, you will notice that where I have marked this, you can see here, gap marked here. And this is exactly from where we got the bounce back in today's trade. These levels are not so relevant right now. The levels which are relevant is 14,900 to the 15K mark. This is where the resistance lies. You can clearly see from our RSI 9 as well as the moving averages that we have rolled down into a downtrend. And the lows over here, which is close to 14,880, so 14,900 is the immediate short-term resistance to keep a close watch at. Any failure to take out the 14,900 on the upside will definitely lead to sell-off because of the fact that now, thanks to this 1, 2, 3 kind of a two-legged sell-off, you will start to find hidden negative divergences shaping up with the RSI. Once that is confirmed, the negative hidden divergence will definitely confirm that we are now in a strong downtrend, which will open up possibility of further downsides eventually. Maybe not immediately because the market had its share of fall for 5 consecutive days. So eventually, maybe. So for me, 14,900, 15,000 is a very critical zone. If the index takes it out, goes above that, then we are looking at a range-bound market. In fact, we are in a range-bound market. If you look at this behavior of the market since it hit the highs in mid-Feb, since then it's not done much. It fell, it bounced back up, it fell again. There has not been any gain or loss in terms of price, just a lot of volatility. So if 14,900, 15K is not taken out anytime soon, this is not the market that we should be looking to buy aggressively. On the contrary, we should wait out, or in the derivatives market, look to go short. I would say cautiously bearish should be the stance until and unless 14,900, 15K is well taken care of. Bank Nifty, similar story. I have this red line which I drew last Friday session, if you remember, and I drew in few of the other sectoral indices saying that a breakdown from this is very likely, and if that happens, then we are looking for some more correction. So some more correction is what we've got. The Bank Nifty is also teasing with its minor gap up between the 1st and 2nd of Feb that we see here, and then we have the highs of mid-Jan, which is close to that 33,000 mark. Decent bounce back today. You can look at a closer look from the 75-minute time frame. This is a decent bounce back that we have. We've got some PCD shaping up here, which led to this bounce, but it's got some serious resistances. Short term, 34,500, 34,900, 35,000. So it's got some serious resistances up ahead. If I'm not mistaken, last Friday's session, we spoke about that if market breaks down, banks, private sector banks, Bank Nifty can lead the fall. And we do see that happening. Quite a quick look at the sectoral percentage movers in this week's trade, and we can see realty followed by PSU Bank, Pharma, Private Bank, Bank Nifty. So the banks did fall as we were anticipating, but the real estate was the biggest sectoral loser. FMCG gave a surprise move in today's trade, a big move, which led to it being the decent 2.9% weekly gainer. It'll be interesting to take a look at how these sectors are playing out over the last 3 months. And we have been seeing that in terms of the tail, the banks are very much there in the positive quadrant. The metals are very much there. Small caps and mid caps are there. Public sector enterprises is also doing very good. This space, the CNX PAC public sectors enterprises, will be very interesting to keep a close watch on. So will be infra. Auto is also doing good. So these stocks, auto, infra, banks, which have given us this breakdown, are all sectors which have been relative outperformers. So yes, it has fallen. Yes, the Bank Nifty has broken down and it's still weak in a downtrend, but quite sure that it's going to give us a bounce back on the upside. Energy is the only sector which is in the improving quadrant. Now, OMCs and Reliance Industries will be very interesting to keep a close watch on. We did see some nice movement coming in from ONGC. If the flow of RRG has to go right with energy, then ideally what it will do is it will gain room horizontally. Gaining room horizontally means gaining relative strength. And gaining relative strength means if the market goes up, this guy will go up more. If the market falls, this guy will fall less. Whether that's going to be the case or not, time will tell us. But the fact that energy is in the improving quadrant suggests us that we should keep a close watch for some relative outperformers coming in. In terms of the ones which are lagging, you have pharma. We spoke about this very clearly. Pharma's likely to stay weak. FMCG slipped into the lagging again. Media is quite volatile, and then we have the consumption story from the improving quadrant. As you remember, we've been talking about consumption and FMCG might go to leading, but no, both of them came down to the lagging. If you ask me, cautiously bearish is our stance, and you should wait out the first couple of days in next week's session and see if we get some bounce back from these guys. It will be worth to play out, or else don't go on the long side. Wait for the markets to bounce, and if it shows signs of fresh weakness, I think it's a sell on the market for the time being. At least 14,900, 15,000 will prove a strong. A quick check at the sectoral indices before we move on to our usual Friday night's discussion. Energy gave a nice move, a big engulfing pattern kind of a movement. It's got some decent support coming in at 17,800. This is the breakout point. Metal, very strong sector, very strong charts, but it's cooling off, and it should because of the way it had rallied. If you look at the weekly charts, you'll get a sense of it. This is the way the index have rallied. So some degree of correction like these is due. Pharma's a weak one. You can see it's in a downtrend and it's been extending further down. Pharma has managed to test the lows of October 20, November 20, which happened to be the lows of September 20 as well. So this zone is quite a important level for the index. We're talking about pharmaceuticals here. So we don't mind if the markets, the pharma sector slips down at this level, creates some positive divergence down here with RSI. Then it will be interesting to look at for some contrarian long trades within the pharmaceutical. Maybe we can touch base on this next week. It will be interesting. PSU banks weaken further. Consumption like pharma is also down. It's holding on to these lows yet again. 5,800 consumption story will give you a big descending triangle breakdown. If you like to trade patterns or observe these kind of patterns, this is what I'm talking about. Big descending triangle breakdown. Media stuck in a range. Private sector banks also gave this break like Bank Nifty did. These are all drawings of last Friday's session. Mid cap, not bad. We've got a sell-off, but I think if it falls further down, 22,000, 22,200 is the kind of levels one can work with. Auto gave you this breakdown. We did draw this level. This is also very similar to a descending triangle. FMCG, big move today, huge breakout after this range bound low volatile zone. The long-term charts for FMCG is quite encouraging. We've got this big breakout, a throwback, and now a continuation. So this is what I was expecting 3-4 weeks back, but let's see whether this sustains or not. Very important level will be 33,500. Quickly, finance, we've got this breakdown, small cap, very similar to the mid cap, holding very strong. Real estate, the biggest loser this week, clear breakdown from these levels that we drew last week. And finally, IT. Now, IT did give a big move up and then an equally sharp move down. It's stuck in a range. Stay cautiously bullish. Stay cautiously bullish. One can look to trade the bounce back in stocks like HCL Tech and Infosys. Let's quickly wrap it up. 14,900, 15,000 is the immediate short-term resistances for the Nifty. Unless this is taken out and sustained on the upside, one should not definitely go bullish on the overall markets. All right, thanks a lot. This is where we end our market wrap, and now let's talk about the stocks and sectors which we may like from a medium to